Today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings in the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%.
XRP Rippers, thanks for the 11 months. I appreciate that. But this guy is so full of shit. Of course, the jobs are good. People are working more jobs, 2-3 jobs. So, of course, the numbers might go up just a tad bit. Let's keep hearing this bullshit.
12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected
100%. I mean, exactly.
in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
Billionaire faith, that was directed at you, like you guys are supposed to know what I'm fucking talking about. But billionaire faith, 100% agree.
Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Yes, I can, Tanya. Thank you, love, for suggesting that. I don't know why I didn't do that already.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects.
I'm sorry, but XRP just doing its daily up, just down 12.34% in the last 24 hours, kind of thing, you know?
Therefore, too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024.
4.3%. I don't know if any of you caught that. Oh, I only pulled back up here. 4.3%. He said 4.1% at the start of the year. So they've upped it by 0.2%, or what is that, 20 basis points from 4.1 to 4.3. That's something. There's an anomaly. That's something.
And 3.1% at the end of 2025.
What's going on?
These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
I mean, could this guy be any more of a dope? I mean, I'm just being serious. Like, are we serious?
Thank you, Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point? and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year more than we'd expected at the time of the.
You know what the funny thing about this is? Just imagine this. So imagine you had to borrow money, and then you voluntarily raise the interest rates on the money that you're paying back. Like, how fucking stupid do they think we are? Like, they literally printed $2 trillion and they raised rates. They're printing money and they're paying more money to pay themselves back. It's the dumbest shit I've seen in my life. If you ever needed a reason not to buy government bonds, this dope is the reason.
In December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses.
Yeah, no, Chariot is 10 and 12% unemployment is scary. It is. And then the QE like billionaire face said it reversed it. He can talk all this nonsense, but he effectively did quantitative easing. He went back to easing instead of tightening. So this is where you get the pumps. Like, let's see what else. Anybody want to take? I mean, taking a gamble would be if we hold this. We hit 4.32. Whoops.
And on inflation.
Hitting the gamble would be we hit 4.32 on XRP, and you would hold that and rise up from here. That's the gamble. This is the area you would gamble from. That's why I put there. You hold that and you pump. So, I mean, this sounds a little dovish to me. If this continues dovish, it's going to pump. Look at the dollar. It's cratering.
Such a tightening in financial
God,
conditions
the dollar is
would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions.
Just real quick, while Jerome Powell's talking, I'd like to light a vigil for the U.S. dollar, as it seemingly is going to an early grave here.
Over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know. So
Do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular, our lending facilities, the discount window, and also the new facility.
Nick?
Nick Timmeros, the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and, the people who write the minutes will be very carefully counting, but I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do. And that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. But there may also just have been. Remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's people. It's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the early.
I will say my silver and gold love when Jerome talks, though. Man, is it a beautiful thing to see. Look at this. I told you, silver and gold. I showed you the $20 bill. You can get an ounce of silver. Not anymore because it's up to $23. They love when Jerome talks. My precious metals never do better than when this clown talks.
Data in the first 5 weeks of the intermediate period.
Well, you guys could hit that like button. 24 likes and 76 people watching. That's you guys are doing worse than Jerome Powell. Seriously, can you please hit that like button? Helps push me through the analytics. I know I haven't said it yet, and apparently I need to say it a lot more.
Pointed to stronger inflation and stronger labor markets, so that pointed to higher rates. And then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
We know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, many banks.
This guy's such a dope.
Our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a...
Well, I have no idea what's going on here, boss. I mean, this guy, I don't even know why they asked him a question. He has no idea what's going on.
concern that there would be some sort of economic contagion or financial contagion from the failure?
Hey, Michael, thank you for the 10 months. I really appreciate that. Appreciate that. And yes, silver. Silver.
Of these banks.
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly.
47 likes, 83 viewers. I think we can do a little bit better than that. And if you don't want to keep hearing me, just hit that like button. It's so simple, so simplistic.
That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as vice chair for supervision. I realized, right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And what we did was early Monday morning, we sat down and said, let's do this. And he was obviously going to lead it in his capacity. So I don't, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
Howard?
Chair Powell, Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes, I mean, what actually happened, Howard, was I got the question 12 times.
Hey, Christian Kennedy, thank you for the $5. I really appreciate that. I really do. Joe, good job buying the silver, and it is all scripted, Kayla. It is. This is all part of it. It's all part of it. Somebody tell you what's going on here. They raised rates by 25 basis points. He's basically bullshitting us now, and he's pretty dovish right now. The only thing that really came out of this is in 2024, they plan to raise rates up to 5.1%. Now they're saying 5.3%, so that's something to pay attention to. That's a little hawkish if you look at it long term. But what he's saying right now, like, everybody should be like, holy shit, he's going to raise it to 5.3 next year instead of 5.1. So basically that's what's going on. But the rates were raised 25 basis points.
So maybe it's a feature, not a bug. But yeah, absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44%.
Yeah, Shift Pod. And right now it's still at 85 to 1. So you can get your gold later when you turn in 40 ounces of silver when it's 40 to 1. And then you get to keep 40 of them, assuming you bought it at 80 to 1.
Of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February and we still don't have now is a sign of progress in the non-housing services sector. And that is, that's just something that will have to come through softening demand and perhaps some softening in labor market conditions. We don't see that yet. And that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's real.
Welcome to the 90 people. Please hit that like button. We have 54 likes. It would really help push more people in here, as I have a hard time getting through the analytics. I would greatly appreciate it. And Michael, thank you for the $5. I appreciate that. I like the beaten up game control. Thank you so much. I do greatly appreciate it. Reno, 80 ounces of
Very
silver.
large body of literature. The question is how.
Oh shit. What the hell did I just do? Whoops. How'd I do that?
It will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking for purposes of our monetary policy.
Reen, any amount is good. If 80 ounces of silver is what you can afford, that's what you do. Now pay attention, everybody, with XRP, because I know a lot of people are here. I seen nothing, Kayla. I seen nothing. You know, yeah. I mean, anyhow. But with XRP, watch 432. If we hold 432, this is just a bull flag. It's a wildest guy's bull flag, and we're gonna pump very high, probably to. I would say we would retest the top at about 495, but then we have to look at the 528 area. So if this does hold at the 432, pay attention, because this could be a nice healthy pump.
We're looking at what's happening among the banks, and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions. So that we're looking at, and it's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused on commercial real estate?
So, we're well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong, it is sound, it is resilient, it's well capitalized, and I really don't see that as at all analogous to this.
Another question, would you be open to an independent investigation separate from the Fed's probe?
I welcome that. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails their investigations, and of course, we welcome that.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And
We will never see 2% interest again in our lifetime, I would like to think. We're not ever going to see 2%. When they raised interest when we were below 2%, the economy was doing fine. They said, oh, we got to get to 2%. Let's start printing a bunch of shit. Well, you reap what you sow, folks, and we will never, ever see 2% again. We'll be lucky if it stops at 5 or 7 or 10.
if I can follow on that, but they're working, the spending that's happened is working against what you were doing, right? So it's prolonging inflation?
You know, if you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps part of what was driving inflation, but that's not really the story now.
But he's processing it, so some days you have to overwhelm it.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right, we have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So we
You're right. If the regulators would do, we would. And as far as I've seen some questions about XLM, if XRP makes this pump, XLM and XDC will make the same pump. It just might come in a different hour cycle, a different 4-hour cycle or daily candle cycle, but they're both going to do the same thing. Assuming we can hold this, this would be for all three of them. I'll go through both of those other charts.
With the FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes.
Okay.
Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end?
No,
Thank you.
absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions.
Another thing to mention there, though, he said if we need to raise rates, we will. Higher than we want. He said if we have to raise rates higher than anticipated, we will. So if they raise rates higher, I mean, this could turn into a big mess. Big mess. But short term, because of the quantitative easing they did with the $2 trillion printing, you're going to have this short-term pump. And I'm not exactly sure this is over. In the 30 minutes, we do have a bearish cross here. But in the 4-hourly, it doesn't seem that this is how a lot of them are. Immediate short-term, it looks bearish. But 4-hourly, it looks a little more bullish. So, in the daily. So the higher time frames will end up winning out if that's the case.
The balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways. So let me be clear about how I'm thinking about these recent developments. So recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Katarina. Hi, Chair. Katarina Saraiva with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and that
That nonsensical bullshit we speak of. So on BITGET, on the USDDP, which if you're trading the futures, so if you're shorting on BITGET, look what it went up to on this 30-minute candle. And I'm not joking. This just happened. I didn't see this. That's why I downloaded that chart just now. This is XDC. Supposedly, on the 21st on Tuesday, yesterday at 6:30 p.m., XDC had a candle spike up to almost 9 cents, which means anybody who got liquidated who shorted the market, period. I mean, look at that bullshit. You don't see that across the board. I'm sorry. I'm just intervening real quick. This is the market manipulation, folks. So do you see this on all the other charts? No. But on the BITGET chart, on the perpetual futures chart, unbelievable.
Impact of large unrealized losses on bank
I
portfolios.
mean, Jesus.
Can you talk a little bit more about that discussion? Kind of what was talked about in light of that?
Oh yeah, this is on the perpetual futures chart. So any exchange you're on, I can guarantee you probably had a similar spike like that. This is what they do. That's why futures trading is so volatile. And look, in that same 30-minute candle, it probably came down here first to 258, then went all the way fucking up there, clearing out all the longs and then the shorts. Look at that. It literally cleared out the longs first. I guarantee it. Look how far down it went. It went all the way down to 20.25. 0.25. Everybody got taken to the woodshed. And everybody who went long, who thinks that those people made a bunch of money, they went to the woodshed first. Shameful and sickening.
And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't know the specifics of that.
Breaking news, XRP breaks the 432 support. That's big. That's big, folks. So I get paid the big bucks. Stay on top of this. I don't get paid the big bucks, but in theory, I get paid the big bucks. Now we're coming down to this 429, ladies and gentlemen. We lose the 429, and this bearish cross is going to hurt. Because then we're going to have to come down possibly to this. Ooh, we might have to retest 40 cents if we lose this area.
It's quite an interesting 7 weeks. But I will tell you, though, that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions.
Okay, who's ever left watching, we got 90 people. Make sure to hit that like button, but I'm sorry I keep interrupting, but for XRP, 102.605, if we get rejected on the US dollar currency index, the DXY, we get rejected there, this could be an overzealous sell-off with some liquidity hit for a further push up for XRP. So let's see if this does reject here at 102.605, since it is lining up with this and it's not doing it on its own. We'll see what happens here. So that's what we're looking at. And then if XRP can come back above the 432 level, we'll be fine. Even now where we're at, folks, that 429 level on that pattern resistance, now trying to use it as support. We haven't used it as support yet. So it is what it is. But this looks like a bear flag is being put in here on the US dollar.
That have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently engaged, very much engaged with the bank repeatedly and was escalating. But, nonetheless, what happened happened. And so that's really the purpose of one way to think about it.
So if you're just tuning in, quote, the only big news has been in 2024, they were saying we were going to go up to a federal funds rate of 5.1%. Today, he said it's going to be 5.3%. So that's a 20 basis points higher than they initially said to start the year. So yes, that's of significant news. They're going to raise it 20 basis points higher, confirmed today for 2024. And then I seen one comment that I wanted to say. Somebody said they caught the live for the first time. I don't know who it was. Oh, Mango, thank you so much for joining the live for the first time. Shift Pod, welcome in. John, to everybody else, thank you very much. But as you can see, everything is dropping like a rock because of Powell. But this could be the shakeout and the shuffle before the ruffle, so to say.
Review that Vice Chair Barr is conducting is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
Michael, the pump's not going to come because the markets are expecting a pause. They're not pausing. They can't pause. But Michael, the markets would pump because of this $2 trillion easing. That would be the reason to pump. But This is a nightmare, dude. If anybody's really paying attention, he just said for next year, and within this conference, he said that we're going from 5.1% in 2024 at the max, and he's upped it to 5.3. That's an additional 20% on top of what he's been talking about. Do I think this is a bear trap right now? Possibly. I think it's a 75% bear trap right now. The problem is if they push it too far, you're going to hit liquidity and liquidations. So pay very close attention. It's getting very dicey here in the markets because Bitcoin, if you actually look at it, we'll listen to this dope. But Bitcoin is actually not doing much. Remember what I talked about? If you watch the daily updates, if we didn't break 28,500 and hold it, which we didn't, we had to come back down. No big deal to 27,000. That's not a big deal. We haven't had a big pull up and a breakdown to confirm this area. We did come up and have a little bit of a pull down and retest. But if you want to do this and confirm it, coming back down to 27,000 is not the end of the world. So a lot of people, I think, are about to get slaughtered. They already have. A lot of people said, Tom, I didn't buy XRP like you said the last year for under 40 cents. I waited for sub 20. Should I buy it at 47? I'm like, are you crazy? I suspended buying XRP until it's sub 40 cents again. This is exactly why. I won't buy it over 40 cents, but I bought a nice amount under 40 cents to satisfy what I had before and then some. But I have a lot of liquid capital for sub 20 cents. There's a big plot here going on. If you mentally get taken out of this game, you're never going to be able to reap the rewards of what's going on. XRP hell holds the liquidity for the bank crisis we're going into right now. That we're already started. We've already started. There's no coincidence why it pumped and now it's dumping like this. We know what XRP does. Would you rather XRP dump like this before going up to 49 cents and losing 25%? If you're holding it? This is standard operating procedure. I would almost be willing to bet this is a bear trap right now. This is too obvious. This is too fucking obvious with the US dollar dumping like that. It's too obvious. Everybody's thinking collapse now. I think this is going to pump. This would be the time. This would be the golden time. It's already down 10%. Bitcoin's once Bitcoin hits 27K, it's already close. XRP's getting close to this next major resistance, and this could be a little bit of a pullback. But look at the volume that came in the sell volume. Does that look like we had this candle? Volume starting to, what are we looking at here? You know, let's listen to this dope.
I will have to come back to you on that. Yeah, I don't know.
I couldn't even finish the fucking thing, so it's a good thing I interrupted him. Didn't even answer the fucking question. Please hit that like button. We're up to 80 likes, 96 viewers. I'd greatly fucking appreciate it.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors?
Well, I'm not saying anything more than I'm saying. So,
I waited this whole time to hear this exact question. What are you going to say? I'm not going to say anything more than I'm saying. Because for real, the government has put themselves in this spot. You're not going to bail out my credit union? You're not going to bail out anybody else? Everybody laughs at me. Why do you have money with JP Morgan? He's an essential player. They're going to bail his ass out. I don't have 250,000 or more, so I'm good. But I know if it comes to it, you got to play with the big guys while you also have the little guys in store. And it's kind of like a storage area.
what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious.
Basically, what he's saying and the government saying is they have the tools to bail out these banks if they've been bought and paid for by the constituents at the bank. Silicon Valley Bank. Oh, in California, with all the wealthy people with technology, where all the bigwigs bank. It's a miracle they got bailed out. No, I think they pay the politicians. So that's why they got bailed out. Signature Bank, another big one in New Jersey. Just happens to have a bunch of big constituents. Oh, too big to fail. Silvergate. Oh, man. That's too big to fail, too, because we got a lot of our big blockchain guys in there that are paying the federal government to slaughter the technology and create the Fed coin. I mean, it's so fucking ridiculous now. Buy your gold and silver. Buy silver. Just change it for gold later.
Harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Go to Greg Robb.
Catnip, I appreciate that. I love doing these lives. I really do.
Thank you, Chair Powell. Greg Robb from Market Watch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a
bullshit collusion.
Positive outcome in the sense that the transaction was agreed to, and it has been the markets have accepted it, and it seems to have gone well. And I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
I think the question is, historically, it's hard to.
Mr. Knight, please.
Yes, sir. Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
It depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down. Because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation, and we had several of those, and they're very good for people. You see late in expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
Jean.
Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
It's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been change.
Sorry, guys, I needed to roll some relaxation for this dope, so we're gonna relax while this guy is doing his thing.
In that, the question will be how long this period is.
Welcome into the 100 people up. I spoke too soon. Make sure that like button is. It will greatly help push me through the analytics, and more people can hear the truth. I don't bullshit. I tell the truth.
sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and we're certainly trying to find it.
Nancy.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. That's and I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. What can we do to make sure? But again, that's not for me to answer today.
I have specific thoughts on that.
Well, I see if I did.
Like, who the fuck is it for to answer then? Like, this is your fucking job. Like, what do you mean it's not for you to answer? It's his fucking job. Like, he's here for the press conference to answer like, what is he talking about? It's not my job. Well, sure as hell is an XRP Future Millionaire's job, then whose the hell job is it? I would love to answer these questions. This guy's a dope. There you go. He's a dope. He doesn't know what the fuck's going on. It's not his job.
I wouldn't share them because I really, this review is going on, and I want nothing other than us to
Right, Don? Like, here's human services. Like, are you shitting me?
find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. It just isn't appropriate.
Partially informed, like, you should know this shit. I know this shit. I could answer all these questions. Like, if I can answer it, you sure as hell should be able to answer it. He can answer it. This guy knows what he's fucking talking about. They all know what they're doing. They're all bullshitters. Ooh, this guy pisses me off.
There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, to this work, not connected to this bank, and under again Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Shawn.
Oh, yeah, now we got to shift to the last question. He's having too much now. He tapped somebody else. I can't deal with this no more. This is it. Last fucking question here. We're done. Yeah. It's weed. It's cannabis. Our sole desire. I do not smoke cigarettes. I never don't like them. But I will definitely hit the cannabis. I live in Michigan, so it's been legal here for quite some time.
Berger with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures
Well, lady, I can't. It should warrant a rate cut right now. What are you talking about? We just passed a $2 trillion package, and now we're raising rates on our own money that we're borrowing. Imagine you went in to get a car loan, and you got a loan for 4.75%. 2 weeks later, you had to borrow more money, and they're like, well, we'll give you this $2,000 at 4.75%, and then you come back and say, well, actually, I got to raise rates by 0.25%. So actually, I'll pay you 5% now on this additional money. Like, how fucking stupid! Like, that's why Peter Schiff and Elon Musk and a few other people came out and said, hey, there's no reason to raise hikes. Like, if you raise rates, you're costing yourself more money. They essentially took out a bigger loan, and now they're taxing themselves more on the money they just took out. Like, duh! Like, are they trying to fuck us up? Yes, they are.
Did any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a,
Curious how you view financial conditions now, and if
Yeah,
credit
okay.
were to tighten enough, if that would prompt a
Well, that's above my pay grade. I can't answer that question. You're gonna have to ask human resources for that one. Don alluded to that earlier.
rate cut.
so, financial conditions seem to have tightened, and probably by more than the traditional indexes say, because
You know what? I feel better now. I would like to think he's just trying to hold his dentures in. That's why he's talking like this. I don't know how to answer this question. My teeth are about to fall out. You know, that makes me feel better. He's trying to hold his dentures in.
the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which if they're focused on, bank lending conditions and things like.
Guys, like, you don't even understand. While we were talking, he literally turned a $20 bill into $19. He literally turned a $20 bill, and it's just barely worth over $19 now since he started talking. Like, I'm being for real. Like, we're almost back down to 102 now. We've dropped off almost a whole dollar off the dollar. He's killed 0.8. Well, okay. I've over-exaggerated a little bit. But that's what I like to do, because he's bullshitting you, why can't I? He's basically taking your money away. You've lost 0.9% on every single dollar you have. That's being real. You've lost 91 cents on the dollar right now. Well, 91 cents on the $102. It used to be 103. But you get the picture. If you have a dollar, it's worth 0.9% less. That dollar's worth about, what, 0.99? 0.98? I don't fucking know. Somewhere in there, 0.991.
They show some more tightening. The question for us, though, is how significant will that be, and how, what will be the extent of it, and what will be the duration of it? And then, once you know that, there's a fair amount of research about how that.
Hey, could 2 people hit that like button? We got 110 people in here, 98 likes. I would love to have 100 likes. Just make people who come in here and be like, hey, 100 people hit like, he must not be that bad.
With broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, so that's all I have to say. So,
Thank you.
thank you very much.
There you go. A hawkish end, at least he said rate cuts are not in our case, or in our interest, or whatever the fuck he said. I don't know. I kind of tuned him out a little bit. But he did say rate hikes are not in our interest. Yeah, that's what he said. We'll go with that. That sounds pretty classy. So, but that's what he said. So, what does everybody think real quick while we're all together? Because this turned into a shit show. For the US dollar, it turned into a shit show. For XRP, it doesn't know what it's going to do. For Bitcoin, the good thing is it did not lose 27K as we talked about at the start. If Bitcoin held 27,000, that's a perfectly normal move. If you watch me on the day-to-day updates, we had to break past and hold 28,500. We did not, which meant we had to come confirm this area, which could be determined as right shoulder. But as long as we hold it at 27,000, we hold the neckline, and then we can come daily day alone. Maybe we come back up here. But at least we hold off the storm while he's talking, and at least we did that. So, what is everybody? I want to know everybody's honest opinion. Thank you for the 113 likes. I know a lot of people are going to leave now because he's done talking and you're going to go on about your daily day of business. But if you pay attention, I'm going to do an update right after this. And if you want to come back, I'm going to gather my thoughts for like 5 minutes. And then I'm going to do about a 10-minute update. I'm going to talk about XRP and how this is related and how we can possibly, this is a bear trap, if we do hold this level. If you look at XRP, I've got this all scoured out for everybody. Even though we have an overextension here, you can still come back up and hit this 432 and bounce out of here. Now, if we lose the 432 and we use this as resistance here on this pullback, now we got a problem. Now we got a problem. Oh, no problem, everybody. No problem. I appreciate each and every one of you. If some of you are not part of Tom's Army, join Tom's Army. can always send a donation or just hit that subscribe button to the channel. You being here and hitting that like button means a lot to me. I don't do this for the money. You know, I like when people pay it forward. So just thank you for hitting that like button. That's paying it forward enough for me. So I do appreciate each and every one of you. I can't believe how many people made it into this live. I appreciate each and every one of you. So, but with XRP, what I was saying, not going to get all mushy. 432, we hold the 432. Our first area of concern is coming back up to this 449, and that's a pattern formation here. And this is more, the problem with this is the short-term pattern. So we would have to come past the 429 and hold it, and then push our way up. Now, that's the first area we have to get back above to make sure we pump. And this does look like a bull flag could be forming. Now, I will show you a chart that I've been watching that's very similar, and it had a little pump here, not as big as XRP, but if you look at this, it popped up and then it did a sideways and down. This is one that I believe is working on a breakout as well, but it's very similar. It came up, it's doing the sideways consolidation, and it's on the top of this formation. The reason why I'm showing this is even at 666, this is a breakout point. What I want XRP to do is follow something like that, and what I want it to do is how that's on the top of the breakout. I want this back on top, how we looked at MKR. I want this back on top, if you're watching right now still. The 4, I want to give you the exact number. This is like 40, that's like 429 there. So we have to get back at least on top of 429. Minimum. We've got to get on top of 429, and then we'll be looking a lot like MKR. Catnip Life, my channel has the links. See? It's a journey together. You get in tune in the comments. So make sure you watch the update after this live. I appreciate each and every one of you. I'll give you one last second to say bye, but stay blessed, everybody. I really appreciate each and every one of you. Hashtag be better, do better. Hashtag FUD Assassins. And remember, help one person each and every day. Because if I don't do my part and you don't do your part, what the hell is the point on this journey to 2025? You don't want to do it alone. If you want to donate, if you want to be able to trade XRP in the USA, I have, 3 good links. 2 of them you can trade, no spot fees, buy and sell, and then you can futures 250x, which I don't advise it, but if you want to do it and it floats your boat, so be it. And then I also have Uphold, where you can hold your money in your native fiat, so you don't have to put it in a stable coin. That's all in the video description, and also I'll pin it in a comment below, but in the video description, just look at that, it's there. And then if you want to donate XRP and or join Tom's Army, it's also there as well, but I don't really advertise any of that. That's why you haven't heard anything about that in an hour and 2 minutes. I just like to say it one time, so if anybody wants to do it, and I usually do it at the end. So if you're here for an hour and 2 minutes, chances are you might want to support the show. So, that's basically it. I just enjoy doing this, and I like talking to everybody. So when people are talking, I have a hard time leaving. Tom made me a patient crypto investor. Mr. Anderson, that's all I want to hear. No problem. Our soul. Let's see how many more people this will show. Lee, cheers, brother. Shift Pod, thanks a bunch. I appreciate you as well. Let me go on my phone. I can see more people this way. Gotta love YouTube. When I'm on Twitch, I can see everything. XRP Rippers, you're way too kind. Thanks for the $10 CHFs. I know what this is. I don't remember the conversion, but I remember last time it was doing very well compared to the US dollar. Well, on that day it was. Maybe today it is too. Let's see, US dollar. Wait a minute. It's the Swiss franc, damn it. Rippers, you are the Swiss francs guy, aren't you? I know it. That's the Swiss francs guy, and I've gotten it wrong every single time and called it every currency known to man. That is the Swiss francs guy, damn it. Last time I think I called it, I don't even know, the ruble or what. I don't even know what I called it. But it's the Swiss franc. The Swiss franc. I am getting better. Now we got to do a search. Let's see. Let me grab my phone real quick. What is that again? Fuck. I know it's the Swiss franc, but what the hell is the abbreviation so I can type it? Oh, yeah, the CHF. CHF versus US dollar. Let's see how it's doing compared to the US dollar now that old Jerome. Woo! The Swiss franc, now that Jerome Powell has spoken, that donation was not just a. What was the donation again? I'm sorry, I'm trying to make a point of how Jerome Powell just helped me personally. He screwed the US dollar, but for this one donation, it actually helped. It went up to 1.09. So congratulations, Mr. Rippers. Your currency is worth $1.09 compared to every one of our dollars. So you actually donated me more than you intended. So thank you very much. No. But if we can't have a little fun and joke around here for a little bit, it just it just gets dull. Diplomat, thank you very much. Mark, really appreciate it. I can't believe so many people tuned in. Like, we had 115 people by the end. And then I said I was leaving, and 40 people were like, well, fuck this guy. I'm not going to watch him. I just need his feed. It's okay. I'll take it any way I can get it. Joke's on them. They helped me through the analytics. So, it's all good. It's all good. But I do appreciate each and every one of you. Stay tuned for the live, because I'm going to do a live. We're in the live. Stay tuned for the update. It'll pop across your screen if you hit that, I don't know, the notification bar. Turn that to all. Not that YouTube's going to do a good job, but now XRP, I really got to do an update. XRP's down 10% on the day. And it's doing, XRP is what we thought it was, damn it! Goes up to 49 cents, and now we're staring 42 cents down the fucking barrel. We're never going to get back to 50 cents. I'm done with XRP. I'm going to sell this shit and load it in my musket and fire that bitch down to hell where it belongs. Something like that. Wish I had a musket. No, I'm just fucking around. I get it. XRP though, like I said, remember when I said I suspended all buying above 40 cents? It's so I don't have to get above the shenanigans of 40 and 50 and 60 and 80 just to come back to 20 and bend me over and throw me out my own fucking house. So what I do is I buy sub 40 cents after I bought at 47 on average and sold at $1.66, and I said I'm gonna make XRP my bitch. And I said this on the air. I said it on the air. And I did. And now all my XRP's at like an average of 35 cents. Well, old Vincenzo's my brother, my younger brother. So if you wonder where he gets it from, I mean, just look to his older brother of 2 years. Yep, true story. True story. He was born November of 85, and I was born December of 83. And we also had a sister born September of 87. Then our parents got divorced in like 90. Yeah, I'm just a little more reserved than old Vincenzo. I try to keep it a little more professional. Sure is, Darren. The real ones who were born there know why. We know why, because we're approaching 40. You know what the cool thing is, though? When you're born in December, you're always young because you're born in December. Yep. Right, rough recon. One rough recon, exactly. Look at XRP, though. Remember what I said? We lose that support, and we're going to head back down probably to 40 cents. XRP, why? Why? Yeah, well, remember what I said about Bitcoin? It has to come to 27,000, so we have to wait. That's what I started the live when I first showed the charts. I said we had to go to, whoops, wrong chart. Makes me look like a dick. This is the right chart. We have to go back. We have to come back to the right pattern. You know what Jerome Powell reminds me of? My friend. This is what... When Jerome Powell speaks, this is how he makes all crypto investors feel. I mean, let's face it. If you're in the market and Jerome Powell speaks, well, Tom, if only your mouth moved, you'd be better. You're just as dumb as Jerome. No, it's okay. We like Skull. The Skull. We'll call him Scully. And XRP Rippers, thanks for the $10 in Swiss francs, which is actually worth 109 on the dollars. So that means you actually sent me, look at this, $10.90 he has sent me because his Swiss francs is worth $1.09 on the dollar. I do have a lot of knowledge in this brain of mine. Only I used to do all the conspiracy stuff, but I stopped watching it and I said, you know what? XRP comes up in my conspiracies, and this is a true story. How did the XRP Future Millionaire start in this? XRP always came up in my conspiracies years ago. I didn't know what the fuck it was. I just heard Ripple, Ripple, Ripple. I didn't know it was XRP was related to. I didn't even know what the hell XRP was. Well, then in 2020, 2019, I started, 2019 first. And then I actually went to buy it in 2020. It just so happened to be when that lawsuit was announced. I'm like, well, wait a minute. Why the hell can't I buy it? And then from 2020 on, it was just like the last 3.5 years have been a blur because it's all I've done. So then we go into March, and I finally, March of 2021 at 42 cents, I find Uphold. Very first week of March, and I buy it at 42 cents. I watch for 3 weeks as I'm buying it, and all these people, I'm like, you know what? I'm going to be rich. Listen to all these people. XRP, it's going to the moon. We're going to 10,000. It's pumping. And then all of a sudden it went to 60 cents. I'm like, holy shit, these people know what they're talking about. 2 days later, it was at 37 cents. I'm like, wait a minute, what the hell? I thought it was going to go to like all-time highs. And then I started buying. I said, you know what? Fuck these people. I'll just keep buying it. And then I kept watching. I'm like, you know what? I'm going to go broke watching these people because they want me to buy and sell and sell and buy and only buy when it's up here, but never buy down here because it's going to be... I'm like, I don't know what's up and down. So I said, I can do this myself. True story. And I showed from the end of March of 2021, March 31st or March 28th, I always get it confused, probably March 28th of 2021. So we're coming in on my 2-year anniversary, and I have not missed a single day. That is a true story. I said, I can do this better. And I came out with I don't even remember what I said. Oh, I can no longer stay quiet. Did about a 40-minute video, and it ended up getting like 1,000 subscribers on my first video, or second, whatever it was. I'm dead serious. It was my best performing video of all times. Got like 12,000 views. Nobody was even a subscriber to my channel. I had 3 subscribers. Just went ballistic. But it's only because I couldn't trust what everybody was saying on YouTube. Like, if I'm going on there, is it so hard for somebody to say, okay, Tom, here's the problem here. Take all the fun away. I don't care about your products. I don't give 2 shits about who your advertisers are. I don't even care about who you're endorsing. I don't care. Tell me at the end how I can buy XRP and get the fuck off the stage. And that's what I really feel. So that's what I do. So I came on and I said, I'm not advertising shit. And, you know, FTX, it's funny. FTX, Celsius, Coinbase, Binance, Huobi, Voyager are all the big players that have contacted me and wanted to pay me big fucking moolah. I mean, not even kidding. Darren, thank you so much for the $11.11. Fuck, I was doing so good with currencies. I want to say, is that a fucking euro? Euro? He's a mate, so that's got to be a euro. Yes, I'm getting better. Getting better. I won't lose my thought, I promise, but they all talk about all the stuff that you can buy, remember, the trading courses and all this other stuff. I don't talk about any of that shit because I don't care about it. The only thing I do is I tell you, you come in every day and watch my updates for free. You have no paywalls, and people are like, well, why do we pay $9.99? You don't have to. The $9.99 was because people were showing me support for time worked. They're like, you're putting in all this time too. I was putting in 4 to 6 updates a day until some recent injuries have piled up. Not on me, but my son and Julie. Some of you know the story. I'm not going to get into it. But it's been going on for multiple years, but now we have to do it. It's just a lot of stuff. So I just do this. So I said, I'm not gonna do all this bullshit. I'm not going behind paywalls. A lot of people said you're gonna cost yourself money. I don't care. I'm not going behind a paywall because I firmly believe a lot of people that need the information are the ones who are poor. I used to be poor. Through most of my life, I was poor. Raised poor. My dad now is doing beautiful because all the time he served, and it just all of a sudden it's paid off. And for me, it took me until 2017 to figure it out. So it's not been that long. And right when I figured it out, I started buying gold and silver because I said, oh, I figured it out. I'm not going to keep this shit. This bullshit money. I only keep enough to live. And I didn't even have enough. I had negative. So anyhow, we get in there. And now I'm like, I got to go on YouTube because there's a lot of people like me that understand what's going on, but they don't understand what's going on because all these fools. You know, it's like the Cobbs of the world, you know. The only Cobb I want is my corn on the cob. And I'm not going to say names, but I only enjoy corn on the cob. It's less funny. You know, and I cut the kernels because I don't want to eat it off the cob because I don't trust it. So I cut it off the cob. You know, so if you're not eating just cob and you're listening to it, you might want to turn it away because it's going to get stuck in your teeth and then you're going to fuck yourself up. So that's just a piece of advice. Some people have asked me in the comments recently, if you're watching, just take that for what it's worth. That's what I think of that trash. Wait a minute, what was that? Randad, what the hell was that? Was that what I seen? Two of you guys with your donations. First, Darren with the 1111. I'm trying to look at the euro, but wow. I thank you so much for the donations is all I can say because I never expect anything. Wow, 1111 is equal to $12.08 United States dollars. I love Jerome Powell. My dollar is catering, but I talk to a lot of people across the world, so you guys are welcome for Jerome. And then Randad, thank you so much for the $49.99 like that. I was like, holy shit. On top of already getting like 3 donations already, to get that one on top of it is like the coup de grace. It's a coup de grace. That's what it is. So, just in conclusion, what I was saying, I'm not the person, and everybody's like, oh, just wait, Tom. When you get to 10,000 subscribers or 15,000, you're gonna take all that and then you're gonna advertise and you're gonna do it. I'm like, listen, the only thing I'm advertising is what I'm using. Not because I'm getting paid to advertise it, because I'm using it. You're asking me how I buy my XRP. So I literally will go at the very end of my video for like 25 seconds of a 13-minute video at the last 25 seconds and will say, this is how I buy it. If you want to do it, that's how you find it. Go fuck yourself, basically. And I'm not saying go fuck yourself, but for some reason I'm in the go F yourself mood today because of Jerome Powell. So you get what I'm saying. So I appreciate the 80 people and the 129 likes. I really do. I'm not leaving yet because you know what? I'm not doing an update. If anybody wants to see the update, I'm going to do it for each and every one of you here during the live. So so we have to get into the live mode. So I'm just going to do my update for each and every one of you. And if they want to watch it, they can watch it at the back end of this. So good evening or good mid-afternoon, 3:48 p.m. Eastern Standard Time on this Wednesday, March 22nd, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So as we can see, XRP is down 12.4% right now on the day. It's down to 412, and it seemingly is going to be hunting the 40 cents here. Doing this a live update. Thank you, One Rough Recon, for the $3. I really appreciate that. But as I said, XRP is at 41.13. Looks to be saying hunting that 40 cents now as we fell below major supports. This is why I tell everybody you suspend buying XRP when it's over 40% or 40 cents, and you just repeat buying it when it comes under 40 cents. Because as you can see, if you haven't bought XRP yet, if you would have FOMO'd in from anywhere from right now where it's at 41.15 or higher all the way up to the 494, it would have cost you 12.63% just on the day. Instead, we wait. Now you can buy 12.4% more as we see. So if we look at the chart, XRP, first and foremost, what happened in the FOMC meeting, they raised the rates by 25 basis points if you're just tuning in. 25 basis point rate hike. That ended up being the equivalent to a 0.25%. Basically standard operating procedure, but it makes the government look foolish because they just had to print $2 trillion to bail out the banks, and now they're paying 0.25% more on their loan, and they did it themselves. Like, imagine taking out a car loan, and then you voluntarily pay another 0.25% when you have to take out a little extra money because you can't afford your payments. I mean, what could go wrong? So now they also said in 2023 or 2024, if you missed it, the federal funds rate was, they were going to go up to 5.1%. They said today they're going up to 5.3%, which is an additional 20% or 20 basis points. So that's what's going to happen. So now what are we looking at with the XRP chart? I'm glad you asked. The XRP chart, we fell through a critical support of 43.20. That's kind of like your last dance. Let's hold this, but it's not, because we had the 429 that if we had to hold, we could have hold, but we didn't hold. And it's a devastating blow. Now we've completed the bearish cross. It's all but confirmed. But the one thing that I would keep my eye on is that the US dollar is cratering. It's still down by 0.75%, down to 102.408. this could be very well putting in a bear flag. XRP has all but proved what it always does. No reason to buy over 40 cents. You have to buy sub 40 cents. So that is what I want everybody to hear. Does everybody understand? Do you understand what we're looking at? And if XRP breaks, now, I mean, it's basically, if it breaks 40 cents, we got to come back down to this area. And it's going to suck. But, I mean, and the main thing here is XRP could be coming down here, and this could be a huge fake out. It could. Because that still could be. And what I would say is when you're looking at a gigantic pattern like this, folks, and you see the volume, it has come in a little bit more since Jerome's talk, but we'll see. Because there's two options here. It just continues. It continues. Well, that's because I tell the truth, Mr. Anderson. It's just the way it is. It's just the way it goes. I'm okay with that. I'd rather tell the truth than not have anybody in here. Because eventually I'll get mine. And it just comes with what I'm doing. Could we be building a gigantic pattern? Or would we release step by step until we finally get down here? We could be doing that. It's a mess. It's a nightmare. So, it's a fucking nightmare. But Bitcoin, what I was saying is 27,000. That was an area where Bitcoin, we talked about this when Jerome started talking. Bitcoin has to hold 27. I mean, there's no maybes. It has to hold 27,000. Otherwise, does this look like a pattern other than just a little breakdown where you could possibly be like, oh, it was just because if you see a V-shaped recovery, right? That's a beautiful recovery if it does something like that. You always get the overextension down, so who cares if it comes to 26.5, 26.7. But if it comes all the way down, do we want this? Even if it works its way back up, that just proves itself going to end up being a head and shoulders pattern. Higher on the left, slightly slanted on the right. I mean, we don't want that if you want this pattern to go up. So just expect what they're doing right now could be a distraction to push you farther up because they got no choice. The only other scenario is we're crashing, and I think that's too easy. It's always too easy just to go straight down. You want to fill in the gaps that you left. So that's why sometimes you see rising channels and shit like that. This could be a giant bear flag. But even at that, even if this is a bear flag and it ends here, now you would have to expect it to end here if this is the case. Even if it was the breakdown, you could see it coming back up to like 27.5, maybe even coming up to 28. But still, if this ends up as a J hook, you're fucked. We would come all the way down here. And then if Bitcoin does that, that's a problem. If you see that even, that's a problem. It's a problem. If it breaks past 26.6, it's over. Yes. Ali Hamza. Shit, I don't know if I said that right. I apologize. But yeah. If it breaks down farther than 26.6, it's over. Because then I can all but guarantee, even if it does this, or even if it had a recovery, it would just get rejected and then just get the steam to break down. That's what you don't. This is what you don't want if you want this to continue up. What you want is it to bounce here, get the support, get back on here, and be like, oh, that was all for nothing. We come to 30,750 and then figure it out from there. Because personally, I would have liked to believe if everything went right, it probably could have come up there to 30,750 or 30,800. Justin, are we speaking Lions? Or is this just coincidence because you spoke Gerald Goff, the Lions QB's last name? Lions are having a solid offseason, by the way. I'm 39 years old and the Lions always suck. Yes, sir. I knew it. And I'm one of the advocates who actually was like, when we traded Stafford, I'm like, all right, now we actually got a guy who can win. Because Stafford's soft as balls. And he can only win if somebody else is doing it for him, as he proved in St. Louis. And then we didn't have all the talent properly doing what it needed to do. He shit the bed and acted like he was injured the rest of the year. Yeah, it's just what he usually does. Yep, 2017, and also the same case happened in 2021. Go blue. Hey, look what I'm wearing. See? And, oh yeah, and I'm also wearing this. So we can get a gold blue. Let's see. Back to back. So, I'm sporting it today. Or should I go back to this? I started my stream with this. I'm bringing back. Why does he keep changing his hats? Oh, here. How about this? Maybe I'll put this hat on. Yeah, it kind of doesn't look as good. But hey, it's been a while since we went to the Final Four. Or I can make you laugh. It's been a real long time for this one. Oh yeah, 2008 for the Wings. Oh yeah, a lot of people are like, wow, you actually have hair. Who said that? Mr. Anderson, you wish you had hair. Yeah, a lot of people are like, I can't believe you have hair. I'm like, Miles ain't got shit on me. He just likes to flaunt it and do his own shit. But, should I wear my 2021 Big Ten championship hat? I just think these hats, they don't look that great. Now, I bought this one in 2021 when we won, and I bought Old Vincenzo one. So when we won it this year, Old Vincenzo bought me this one, which I think looks nicer than the one before. But hey, you can only buy what they give you. So I return the favor. So that's what me and Old Vincenzo do. We buy each other shit. We just buy it, and then it's just whatever. Hey, thanks, Catnip. Maybe I should show my hair more. Are you saying I should show my hair more? Hey, I'm having a good hair day. Are we saying I should show my hair more? But, I mean, XRP still staying over the 40 cents. But the only thing is, I have a big forehead. I do. And then, I got hit with a bat when I was a kid. I was playing catcher, and this kid was standing in front of me, Patrick Kennedy, I'll never forget. By the way, this same kid, a year prior, ran over Old Vincenzo's arm and broke it in 2 spots when he was like 10. No joke. He was like 10. Oh, it was bad. He had to have surgery and shit. Oh, it was bad. I was sitting there with him, and the kid ran his arm over. It's fucking crazy. And then a year later, he hit me with a bat when we were playing baseball in our backyard. Fucking my nose. He broke it. Boom, went up here, and the doctor, I might never forget, said we might have to do surgery. And he went up there with his fucking finger, and he pulled my nose back down. It's still fucked up now. You can see it. It's crooked and shit. See it? All fucked up. So when people make fun of my nose, I'm like, I got hit with a bat, fractured it. What do you want? I'm lucky to be alive because my bone almost hit my fucking brain. So he pulled it down, and I didn't have to have surgery, but it hurt. I'll never forget. Never forget. My age, 39. I turned 40 in December. 40 in December. I've reached middle-age territory. I'm a veteran young guy. I believe I've turned into veteran young guy now. I'm in 1 month, 24, and I'm already losing my hair. Well, if it makes you guys feel better, I can't see out of my left eye. True story. See my left eye? I mean, I can see blur. But my left eye's got a big white spot on the front. Here, maybe you can see. Yeah, take a look. Take a look. Would you rather have your eyes? I really don't. I have keratoconus in my my eyes. My left eye, I can't see out of it. It's just blur. Can't even see my screen. What the hell's going on? This is what Jerome Powell sees, I'm convinced. What I see in my left eye. Nothing. Blur. I would have to look like this, and I might be able to see you guys. But yeah, how low do I think it can go? It depends what Bitcoin does. If Bitcoin breaks 26,600, we're practically going to be duck diving down to about 25.2. Hey, Crypto Scrooge, welcome in. I really appreciate it. And Crypto Scrooge, if you guys don't know, what do we have? 80 people in here. Scrooge, share your link in here. He's part of the community. He's been since the beginning, since I had like 100 people in here. I'm not even joking, or 500. But he started a channel and he talks about solo a lot. He's talked about XRP, but a lot of solo. I want to say he talked XRP Ledger a lot recently too. So I'll look at gold and silver real quick. We're just enjoying a nice live. I'm going to forego update until later tonight. In lieu, because I didn't want to end the live because we're having fun. Sometimes it's nice for me to talk to my community and, us to be on the same page. Did that really say 137 likes? Jesus Louise. You know, that might be a record for the lives. I'm going to be honest. Might sound sad, but that might be a record for the live, 137 likes. Okay, so first, I will talk about IOTA, I promise. But my update tonight, I'll be talking about XDC as well, because CFX, I told him my next update, which I fucked up this morning because I did not talk about it. So if you're watching CFX, I fucked up. But I am going to do an update on XDC in my update tonight. It's going to have XRP, XLM, XDC, and DGB in it. We'll obviously have to talk about the DXY and the total crypto and all this shit. So it's going to be a jam-packed update in about 15 minutes. But it'll probably be out at 7 or 8 o'clock tonight Eastern Standard Time. So, first things first, silver. It's jumped up a little bit. 22.92 up 2.56%. It's all charted out though. I know where we're heading. We held the 21.409 as of now. As long as we didn't lose that 200-day right there, this line coming up, we're pretty good, and we have an X marks the spot that I have on my chart already. Well, I didn't mark it yet, but here. While all of you are here, I don't usually like to do it until we actually meet the point because I don't want to give my hopes up. But we'll do it all together. So that's the X marks the spot on silver. So that's the link there. Hey, if anybody wants to, Crypto Scrooge, he's got just over, I believe, 250 subscribers now. He's been dedicated for 8 months. And I remember when he first started, he kept talking about he wanted to do it. He went for it. And when he first started, he's, and no offense, Crypto Scrooge, but he's the last person that I would have expected to start his own channel. Not because he doesn't know his stuff, because I felt like he was a little nervous to maybe go out and on stage in front of everybody and show his knowledge, and maybe feared it a little bit. Hopefully I'm not saying anything wrong, but but he's come a long way, and he's proved me wrong. You know, not proved me wrong, but he's shown what he's really made of, and that he can help the community. And there's not a lot of people I trust with solo, so I watch his videos pretty religiously, as he knows, because I'll comment quite often. I definitely hit the like button every time it comes up because I want to be that first one to push them through the analytics. So $24.06 on silver would be that threshold where we would have to break out of this formation. But it's one of those things with the DXY cratering, I should say, silver and gold. It's not that it's become any more valuable today. It's just the US dollar is worth a lot less today. Almost by a whole percentage point. So now this has no choice but to go up. But at some point, gold and silver is going to go on a parabolic run. Parabolic. So that's what you'd have to watch out for silver and gold. I mean, it's just for silver, I mean. We're looking at that as the uptrending resistance. And then if we come down here and break 21.409, it's basically your stopping point would be down to $20.92. Otherwise, you'd have to come down a little farther and $16.29, and maybe even worse. If you broke that, it'd come down way. Well, we don't want to talk about that. We might be beyond that now. We could be beyond that. Excellent. Some people are subscribing to Scrooge, and it's already, if one person subscribes Scrooge, 236, so approaching 250. That's what I thought. Because when I seen it, I'm like, damn, the last time I checked, he was at 96, and then all of a sudden 230 something. I was thinking 250, but 230 something makes sense. 236, that's crazy. Just seeing somebody build their audience. And now he has his own little audience. It's cool. It is really cool. And then gold is up $34.92, up to $19.74 an ounce. And we've broke back up above an an important uptrending support line that we were attempting to turn it into resistance before Jerome talk. But you know, Jerome's good for gold and silver, bad for the US dollar. So he at least helped confirm this move up while he was talking. That's what I was hoping. Because it pushed up right as they announced the rate hike, but we need to stay over this at 1955. Otherwise, gold, just like silver, could have a healthy retracement if it comes. We need to stay in this area, is my point. If we can't get back over that, then we got to come back down to 1825. I really don't want to come back down there. And it's not all in one motion, but it is. It's very possible. And the gold-silver ratio is still a very good time to buy silver compared to gold, because we are putting in a massive head and shoulders pattern. I was hoping we'd get back to 95 to 1, but we couldn't do it. Now we could be coming back down to the 81,480. And then, You know, the funny thing is everybody's like, well, how long have you been looking at silver? Like, how far do you go back on your chart? Well, you can make fun of me, but I go all the way back, and this is not a joke. My silver chart goes all the way back to, oh, this is what, 1997. This is the later one. What's going on here? I had a long, oh no, my gold chart goes farther back. No, this is the gold silver. What am I talking about? That's the gold silver ratio, but my silver chart, I was going to say my chart goes way farther than that. What the hell is this talking about? This chart goes back to 1931 approximately is when my chart is referencing back to. If you see the lines that are being played now and with gold, it goes all the way back to what I'm referencing. It's harder to see on the monthly, so we might have to go back in the weekly. We're referencing all the way back to 1959. 1959, and right now the pattern we're on is going back to about 1999. What we're using as the resistance and support, but then it goes back farther. This uptrending support line right here for 1455, that line actually goes back to the start of where I was starting my pattern in 1959, in June of 1959. And that's the uptrend we're using right now. So a lot of things we're looking at, these lines aren't just going there for no reason. And then algo and iota, and then I gotta stop. I've talked myself out. We've been here for an hour and 36 minutes. I do appreciate everybody, though. 144 likes now. That's got to be a record, Julie. She is sitting here, too. What? Was I not supposed to acknowledge you? Juju. But I'll go in iota real quick. I'll go 21. Is he? Of course he is. Down 5.72%. And I'll go. Oh, we don't want to be talking about these long-term ones. We'll go to the 30-minute. 45. Yeah, see, now they've come into this shit zone because we really needed to get above here. And I don't have the support underneath because I know if it doesn't break above there, it's coming all the way back down. Not to there in one chop, but that's eventually going to be a big area that's not even my algo chart I wanted to show you. But that's an area it's going to have to go into eventually. Fuck, we haven't even got close to there. That's 28 cents. See, that's where we need to work our way up to, is back into that area for algo. All right, we'll do this the old-fashioned way. Yeah, see, algo's found itself in a little bit of trouble here. We're just going to do the shorter term. Whoops. Because I've literally exhausted my voice. But I like doing it. Now we got to do it right. You don't want to do the FUD up chart just so you match it up properly. You want to do it from the back. We don't care if the other sides are crossed below, crossed above. Just got to make sure it matches up. So I'm very tedious. I actually feel pretty good with that. So that's what we're in. There's your pattern. The downtrending resistance from long ago. And then we'll use the short-term support. So basically, we're at our pattern right now. Can we hold 21 cents is basically, or 20 cents? Yeah, 21 cents. And then if we do, you'll see a big burst up here on the downtrending resistance to 23.70 at minimum. And then if we break up and out, you already know the 28 cents from the other chart. That's where we'd be trying to push through. So that's just, if you want to take a picture, that's your short-term chart. And that can also be kind of classified as a bear flag that was formed from the major drop point on algo. Iota. I don't even remember if I had anything on IOTA's chart. Oh, yeah, I do, but it's the wider. I mean, we're in between. I suppose now it's the time to run these through. But this is all you do. You start overextending these, and then you start to... See that? But I don't like to do it until we get there, and now we're there. So, downtrending support line right now. If you overextend it, it's down to 1891. The overhead resistance is up here at 2485. But if we break this, I mean, a lot of these, I have the longer term prospects here. So if we break below these and we lose these supports that we had coming through, it can get very dangerous for IOTA. I mean, IOTA really needs to come up because these patterns are not very healthy coming down in this direction. I mean, you can lose a lot very quickly. Just pay attention to that short term. I can do a deeper analysis later, but fuck. But yeah, I am talking myself out. So I'm going to end this. I appreciate each and every one of you. I do. I'll do an update tonight and cover the rest. Make sure you hit that like button and share this to your friends. I greatly appreciate each and every one of you.